All right, well, man. Well, welcome to the show. Thanks for being here.
Yeah, thanks for having me.
Absolutely, absolutely. I appreciate you joining me. And I've been hearing a lot of good things about you. I've been following you on Twitter myself, and you've been posting a lot of great posts about philosophies and patience. And I think I wanted to really bring you on here because everyone kind of, if they haven't already, if you haven't listened to Beyond the PDT podcast, they've interviewed Kyle Williams and dived pretty far into his background. But we'll highlight a little bit here just so you can kind of get caught up. Kyle, could you tell people a little bit about like a quick snapshot of your journey to where you are right now?
Yeah. So, June 2016, I had found kind of trading through Tim Sykes, and at first was skeptical, like most people are, and then kind of dove into what trading was really more about, and just kind of signed up to his service. And I've just learned from him and other trading books and podcasts, and a couple other DVDs and stuff like that. And so from there, it took me 12 months to be profitable, and now 3.5 years later, I'm up over about 115,000. So just trying to teach other people how to do the same thing.
Nice, man. Nice. That's awesome. I don't know where I missed that. Like the whole idea that, you got profitable in 12 months and then 3 years later you're here. I really appreciate you saying that because, for people like me, I've been working on it for 2 years,
Mm-hmm.
and right now I have now found what works for me and consistency with my setups. It's just, I have my own little habits I got to work on to continue that growth. So it's just nice to see
Mm-hmm.
that like everyone has their own little path. Like you got the Rolling Wolves who do it in 6 months to
Yeah,
the
yeah,
Johnnies, right? And then if I didn't talk to you right now, man, I would have thought you did all of this in less than a year.
no,
Isn't it
yeah,
crazy? It's just crazy how
yeah,
perceptions can just be the completely wrong perception. So
yeah.
it's nice that you said that. I appreciate you saying that.
Yeah, I remember saying something about the same thing in one of my YouTube videos where I was saying and then you see this like professional athletes and like actors, like you see like if you're an audience or a fan of someone, you see them like when you find them, right? You don't see them the years or months beforehand. So like there's like that not delusion, but there's like that misconception that you haven't seen the past before you've seen them
You didn't
someone
see
like
the
right now.
struggles. Yeah.
Right. Yeah.
Yeah, absolutely, absolutely, and that's just good to hear, and not in a negative way. It's just great to hear that you're open and sharing that, and not saying, "Hey, I did this in 6 months." If you didn't.
Right.
But I want to really focus on what's your goals now. You're currently you've crossed six figures, which is awesome, man. Congratulations on that.
Thank you.
And I actually was watching your recap of November, which it was great to see how you're still doing those recaps. I watched your other one last month. I was watching November today, and I'm curious, what's your overall goal moving forward for the next, first quarter of next year?
Yeah, so I guess I would want to do the same thing that I did in the beginning of 20 or this year. So all of 2018, I was, becoming more profitable. My gains were getting bigger. And going into 2019, I didn't have any expectations as to what I was going to make or how I was going to trade. I kind of just started the year off just because I was going to trade. I was going to see what happened. And to start the year off of 2019, I just really killed it. We just had a really good market. And, I immediately had multiple like new best months. Probably like all my like first 2 or 3 months of 2018 were better than all my past months of 2018. So, I didn't have any expectations, so that's why they just came out of nowhere. And so I don't want to have the same expectations for 2020. Like I'm not going to say now my first quarter is going to be just amazing.
Yeah.
But at the same time, I do want to make sure I'm on track to maybe risk more money or to be more aggressive in terms of my strategy in order to continually make more money. 2018, I netted about $30,000, and this year I'm looking to hopefully net close to 90 to 100.
Nice.
So, there's no expectations for 2020, but, I would like to make more than 100. So I have to just keep trading better and risking more, essentially.
So basically you're just more focused on just trading well, really,
Yeah.
what it comes down to, because you weren't coming into this year, you had no idea you were going to be where you are right now, and you
Right.
didn't really
Yep.
have that as a goal, right? It was just more of, let me just continue this process, and it just panned out the way it panned
Yeah.
out, it seemed like.
Hmm.
And so that's interesting because you also mentioned a couple of times in your other YouTube videos about, you want to react to, like, if you're in a play and it's not acting how you wanted to act, maybe you should just get out and then be okay with getting back in. And you actually
Yep.
posted something about that today too.
Yeah.
And And I'm very curious on your thoughts on the whole idea of reacting versus planning, because, and the reason, let me give you some context. I believe, my aspect or my point of view is more of, you have a plan, then you react based on price action. But at the same time, there's also there's also people who are like, well, if you have a plan, then you already have an idea of where it should go, and you should really not have that kind of thesis. You should really be like, okay, what's the stock telling me? And then create your plan around that. What do you think?
I think like, but I find like not even just that question in general, but most things or just in cross-wall trading, I usually find it like being a little bit of both. The first thing I thought of when you asked that question is like every trade I take, I want to have a plan and be prepared. So like whether that's an ideal entry or what I want to see when I enter, a risk in mind, and then a potential profit. Like if it works well, where could it possibly go? So in that aspect, I am, predicting the trade, I guess. But right, once the open comes and once I'm either in a trade, it's now the price action is what I'm reading. The biggest mistake I think I've made with trades is if I put too much expectation and predicting in the time frame that it happens. So like say I want to like bet against the stock going down and I start shorting it in the morning and I think it should work within the first 30 minutes to an hour and it doesn't, I might exit, but then all of a sudden maybe the trade took 2 or 3 hours and then it actually worked. Like the time frame it happened might be too predictable that I do, and I should probably react to that more. But at the same time, there are plenty of trades where I've taken where I should be expecting a certain type of price action, and because it isn't working that way, I will then adjust and react to it and be like, okay, this isn't breaking down the way I thought it would, and react to there. So it's like a give and take between thinking what's going to happen and on the predicting side, but then also, reading price action for what it is and not ignoring what it's telling you at the same time. So let's put that in an example. Let's say, because I know you like to, it seems like you like OTCs and you like to short OTCs, and is that kind of is that just like an idea of what you do? Also long, I'm guessing. I used to 2018 and the beginning of 2019 I longed quite often. About 40 to 50% of my trades were long, but the past like 6 or 7 months of this year, I've actually lost money on longs. I've lost like a couple $1,000s. So I've pretty much stayed away from longs until the market environment changes. So yeah, right now primarily shorting OTCs and then shorting maybe like 30 or 40% of my trades will be shorting like listed NASDAQs.
And at this moment, Kyle's internet went out or had some issues, so we had some technical difficulties, which we solved fairly quickly and just picked up where we left off. So here we go.
My internet went out. You started spurting out and like it started going in bursts.
Okay.
So I didn't get the full question. Yeah.
So basically, let's say you're in a play and you are let's just make it simple. You're shorting something. It's the fourth green day. It looks like it could be red. And you're in the money. Your risk isn't breached, but your profit target isn't there. You might be up, like 1R, right? And because of that, maybe you went 3R. And so that tomorrow it could continue that and actually be the first red day, right? And so because of that, what would you do? What would you do at that moment?
And the stock is still green on the day, you're saying?
It's still green, but it's definitely showed weakness, right? Because you shorted it. There's a reason why you shorted on the fourth green day, because it's a trend change or something different, right? And because we could dive all into that, but it's something different. And then the fact is you got a good entry, you have a good resistance that you're risking off of, and it's been fading. It's just not fading big yet. And so well, how would you normally handle that? I'm just curious your mindset on overnight and so forth.
Yeah. There's so with OTCs, I would definitely be much more comfortable holding overnight. Say I'm up a solid like 10%, or I'm up 1 or 2R or whatever, and I have a solid resistance to play off of, and I got multiple levels. I definitely would be more comfortable holding overnight in that particular sense, especially with OTCs, because mostly there's not many OTCs that put out news overnight. Now, there are some cases where there are, but even when there is news, usually the gap ups aren't necessarily that violent or severe. Whereas if it's like a listed stock, there's a perfect example. It was ALSN or ASLN just 2 days ago before they did their offering, right? Like it went from 3 to 7, then faded all the way back down to like the 4s. But anyone who shorted overnight, like probably thought they were going to be golden the next morning, and then it had more news and gapped up back to 7. So, in most cases, I would probably not hold overnight, especially if it was listed. But OTCs, I would either hold my whole position overnight if I had a lot of room or I was up a lot amount of money, or I would take like half off, right? Just lock something in.
Yeah.
That way, if worst case scenario does come around and there's a huge gap or like it never goes any lower and I have to give back profits, at least I locked in a good portion of it, kind of thing.
So do you feel like, I'm just curious, like we all have tons of moments where like, oh man, I got it now. You know, like, oh, this is the aha moment, but we all have tons of them. Like it's not just one moment. But what's something that sticks out to you that, you know, once you, because you know that it took you 12 months to become consistently profitable, but when did it like, once you find that when you say consistently profitable and that's 12 months, do you mean you found what works for you, right?
Mm-hmm. Yeah.
And then from there, you just continue moving forward and growing it.
Right.
Right. And so what was between that moment and growing it? I'm sure you hit some challenges there. What do you feel like something that sticks out that you can feel that might be able to help someone else who might have found their core that they know that works, and then now they're just trying to grow it?
Yeah, definitely. Because I mean, 12 months. Yeah, when I say 12 months is when I had like I would say my first profitable month that led to all the profitable months that I've had now. But right, it wasn't like I was all of a sudden making a massive amount of money. You know, my 12th month I made like $300. Yep. You know, but it was then the 13th month I made 300. Then the 14th month I'd made like 900, and then from there it just kept exponentially growing. But it wasn't until month 10 where I realized I could be profitable only trading like one setup. You know. And right, and like you said, people will think like, oh, I have it now, but it's like there's so much more things to do after you get to that point. So for me, it was dip buying large OTC panics. Like that was my setup that I had found. And I was like, okay, if I can, trade this like 50 times, I know, 35 of them I'm going to be right on, and my wins are going to be bigger than my gains. So it's like, okay, great. Like I'm going to stick to that. But like tweaking that setup to where I can win actually 35 times, like because everyone knows like, one trader can be profitable with this setup or another trader can be profitable with that setup. But it's like, it doesn't mean every trader can be profitable with that setup. Right. So I had to learn how to be profitable with dip buying specifically for me. And so that took 2, 3, 4, 5 months, even after I'd found it, to really, win 65, 75% of the time on that setup. So it's the one aha. I think it's like a big aha moment to like realize what's going to work for you. And then many aha moments after that to like really tweak everything, so then it starts flowing, much more fluidly to be like consistently profitable.
So when you start focusing on that one setup, it's almost like you start seeing unique things happening within that setup whenever you only pay attention to that one, right? Because when you're looking at multiple things, at least for me, when I was looking at so much that, I thought, oh, I kind of got these all down, but I was not making any money. And then whenever I eliminated and just started trading 3 setups that I've actually tracked over these couple of years, and always saw like, okay, these are profitable, that when you just focus on those, like for some reason you start to see things you've never seen before when you just only focus on those. Do you feel like that happened to you?
Oh yeah, definitely. I mean, because so many people want to trade 3, 4, 5, 6 setup, which is fine if you're a veteran trader and you can like handle that many plays at one time. But when I think you're first starting out, it's so important to specifically only look at 1 or 2, because for the reason that you said, like when you really only focus on 1 or 2, you're able to really fully immerse yourself in that setup, and you learn all like the little details about it, like what makes it good, what makes it bad, might be little like prints in the tape you see, or like volume prints that go off, and all these different little things that you would never have taken the time to look at if you were too busy watching 5 other plays that you weren't even going to trade, or if you do trade, you're going to lose on them. So just the attention to detail and like that tunnel vision for just what you think is going to work best for you one at a time is what I would say to do, for sure.
So whenever you were doing that, I mean, so you only had at that time one setup that you really focused on, right? Is that what you're saying? And so during go ahead.
So when I found dip buying, it was about maybe 2 to 3 months of just that. And then as I started winning more with that, and I started like having that $300 month and then 900, then it was like, okay, that can lead. And so when I started being profitable in those months, I said, okay, let me just see if I can add a second setup. Like, can I focus on 2? And then from there I did, and then I continually kind of added more as I could see myself focusing on new things without hindering the ones I've already learned, kind of thing.
So when you added one, did you add it with the same dollar risk, or was it be a smaller dollar risk? Like, I'm curious on how you did that.
Yeah, it was definitely smaller. So when I when I first so for dip buying, when I started practicing on dip buys, it was 100 shares, like only 100,
Yep.
And so most of my wins were 5, 10, 15, maybe $20,
Yep.
And by the time I started a new setup, I was probably trading, say, for simplicity, like 400 or 500 shares per dip buy kind of thing, or I was risking, $50. But for when I wanted to try a new setup, when I started learning to short, I went back down to like risking 20 or $30 kind of thing.
With the new setup.
With the new setup, right? In a perfect example for now, it's like my gains are quite larger on OTCs than listed, but that's because I'm risking more on OTCs. Like if there was an OTC runner and a listed runner tomorrow, you're right, and I wanted to short both, I'd be okay risking up to $700 or $800 on the OTC, but on the listed, like maybe 300 or 400, like cut in half, just because I know OTC is far more better. So right, I totally agree. When you're learning something new, you should definitely scale back the size, or even paper trade if you're into paper trading.
So whenever you did focus on that one setup for a couple of months, like 2 or 3 months, you had to go maybe even like 3, 4, 6 days sometimes where there was no setup, especially an overextended dip panic buy. There had to be dry days. What did you do? I mean, you're in school now, right? So like, were you like able to get away from the computer, do school stuff, or were you just sitting there all day?
Well, it definitely when I first learned it was a little more unique that there were much more opportunities in terms of like if I still only could dip buy panics as a setup now, I would be waiting weeks on end.
Yeah.
They really don't, they don't show up at all really anymore, unfortunately. But when I was learning them, they were quite frequent. I would say they happened at least maybe twice a week. But that was like kind of the peak. Like this is when we had like the weed runs of the OTC market. So like all these weed runners were dipping, and we had a lot more promotions going on. So I had a lot more opportunities in that sense. But yeah, you're totally right. I mean, there would be days where there'd be 3, 4, 5 day stretches where I just wouldn't trade that setup. I wouldn't, and maybe of course I'm not perfect. So there were other times where I tried like, oh, let me try this new setup, and I'd lose. I'm like, okay, no, go back to dip buying. You know what I mean? So it's like, but there certainly were streaks of 3, 4, even a week where it was like, okay, I'm not going to trade. It didn't show up. So.
And then when it did, so basically you were trading small and slowly increased it over time. Did you have a strategy yourself, or you just kind of increased it by a dollar amount? Like, okay, I'm risking 15, let me risk 30, let me risk 60, let me risk 120. Or were you more like, every time my account grows, I risk this percentage or whatever it may be?
I did it by the 1% rule. I don't do the 1% anymore because I feel like psychologically I'm not prepared to risk 1% of all my capital. But when I first started, it was quite easier in terms of real like world money. 1% of my account was far more easier to risk than it is now. So I definitely did the 1% rule for about until I crossed PDT Rule, which was about for a year to 2 years after being profitable was when I used just the 1% rule. So
when you crossed the PDT at 25K, did you? For me, that's a challenge. That's what I'm dealing with now. A challenge of like being in the like my account is close. It's about 28, 30. So like when I'm trading that kind of account, I'm always thinking about the PDT. Did that affect you at all? Whenever you were close to the PDT?
Yeah. When I was right under it, like when I had like 24,000.
Yeah.
It took me probably a week or two to like keep because I was so worried about like
focused
losing
on it. Yeah.
So I was like, just wait till a win, and I could argue that's not the right way to do it because it does psychologically, kind of like mess with you. But at the same time, it also kept me very nimble and like not taking any I'd rather do that than the other route of like not worrying about it at all and trying to just bust right through it, and all of a sudden you take a big loss.
Yeah. So that's what I did. So you did you did the other way. I worried about it and then tried to make things happen to get further away from it, which did the exact opposite. So I like how you did it. You just you focused on it, but more of I'm going to be really picky to get away from this.
Right. I thought about it as like I refuse to go any lower than where I'm at. Like I only want to take a trade that sends me up. And of course, like that should be the goal every time, right? But it's obviously the psychological factor of being right around 25. It's like it was much more serious. It wasn't just like there was a consequence to it versus no consequence if I'm at like 30 or 40K kind of thing.
Yeah, because that was a milestone. That's a huge milestone because when you start under and then you work your way through that, that's awesome, man.
Yeah.
I think my opinion on PDT recently has changed, like because I actually have a horror story that I'll share another whole thing because that could take too long. But I will say that I think for those who start under the PDT, like yourself, I used to think that was a bad thing, but I think it's actually really freaking awesome because it forces you to be picky. And I think that's why these guys like you, Jack, Roland, I mean, I don't know if Harry started under or not, but just so many people that I know who have started under, they found success. I'm not even worried about the time frame. Just they found it, and then I think it's because it made them be picky, right? And even if you open 2-3 accounts, you still got to be picky because you got to worry about like 6 trades. Okay, I only got 6 trades. What do you think?
Yeah, I 100% agree. So what I did was, right, I had an E-Trade account, which was for longing. So for OTC dip buys, I mainly did that. And then I opened up an Interactive Brokers account, and that was mainly where I learned to short sell. And so, I had 6 day trades. And I even opened up another account with TD Ameritrade to have 9. But I realized I didn't really like Thinkorswim software versus like E-Trade and IB's TWS station, kind of, or Trader Workstation. And so I had 9 available trades, but I didn't even use all 6 of them. I always was using E-Trade or IB. I would really never use TWS or TOS Thinkorswim. So I ended up pulling money out of that. But right, for the 6 trades I had, right, I learned to be very, very picky. And I think it's a mix of what the PDT does to you as a trader, and then how that trader will particularly react. Like I don't have a problem. I don't think it would hinder a trader to start over the PDT as long as they knew and understood the how valuable that is. Which in most cases they're not going to understand how valuable it is.
Yeah.
Right. Yeah. So I say that with very few people will. So it's like because. I think a new trader, say someone started with like $30,000 and followed the 1% rule.
Right.
I personally would find it very hard to start trading losing $300 a pop.
Yeah.
When my win rate was like 20% when I first started.
Yeah.
Like the risk and the downside of losing so much more money in the real world is, I think, much greater than if you started with like $5,000 or $10,000. Like, of course, you might blow that kind of much more quickly, but it's so psychologically less damaging. And allows you to be picky, to really learn and have a high win rate, like really pick the best plays that are worth it. Because even now I'm over the PDT and I still only take anywhere from 30 to 40 trades a month, and that's, for a lot of people, that's very small. And like for me, that's just how I trade. It just I just don't I'd like to specifically stick to what I think is best for my account, kind of thing.
Awesome, man, awesome. I was curious on what you feel like currently is your biggest challenge.
It's definitely sizing, like what we talked about, like me drifting away from the 1% rule. Like I'd like to think I can just follow that 1% rule and keep risking what my accounts are at right now. But I when I get to the point of putting on size that would require that level of risk on a trade, I get too emotional, right? I start kind of, everyone knows how this goes, is listening, who's risked too much, they either cut too early or they don't follow their trade plan, or so many mistakes can come up because you're emotional. And I unfortunately, that happens a lot for me when I'm in, and it also depends on the play, right? Like if it's an OTC, or it's like, say it's OTC that's like a 200% over 4 days, like an awesome runner, I could totally risk 1% because I know that plays so well, and like I'm okay taking that kind of a loss because I've seen it so many times. But if we were on like a listed runner, I could not risk 1%. Like if I wanted to be mentally stable and like think clearly and read the price action and react effectively, I'm just not going to risk 1%. Like I can't do it yet, and so part of that is kind of trying to find that middle ground of like continually pushing my envelope to like, keep it in close to that 1%. Mm-hmm. But at the same time, I can't just jump right ahead and think I'm going to get there right away. So that's probably my biggest like challenge of slowly kind of pushing that limit every day and every month, kind of thing.
And so you're actually you actually are doing that every day, like you have a plan, or every week or every 2 weeks, like you're trying to slowly increase?
Yeah, I do it. I try to do it by every month because I feel like as for day trading, it's so, my edge might not even show up 1 week, right? My edge might only show up 2 days out of the week, or we could be in a busy market. Hopefully, like this winter's been showing us so far, where almost every day there's an opportunity. So I try to look at it with the best long-term perspective, and I usually a month, like in a month, as like one unit being a month, I try to like reevaluate every 1 month. Nice.
Yeah. And so I'm curious. This is just a random, not really random, but I want to know. I was thinking about what to ask you, and I was like, you know what? I'm curious on what you feel like is a misconception about trading when it comes to being profitable and having that consistency that maybe you yourself had, and now that you're now where you're at, you're like, man, I can't believe I used to think this.
Mm-hmm. I think I used to think, and a lot of people think this, because I'll get questions from like friends or close like acquaintances about trading because they know what I do, and a lot of them think I'm, you know, entering like 20 trades a day. You know, they think I'm making something happen every second of the day and constantly focused on a computer. And what I've learned is like I'm actually sitting at my computer like doing nothing more times than not. You know, like the majority of my money is made within a very short period of time during the day, and after that, it's like I'm just watching for new plays, or I'm going over Excel sheets, I'm reviewing personal trades, I'm either making videos on YouTube kind of thing. Like, but it is so much more time watching and preparing than actually in the trade making money. So that's, I think, the biggest misconception, the most thing that I've learned. It's like I don't, 90% of my time is not in a trade kind of thing.
So what is your day like now? Like every day, like, because you're still in school, or you graduated now?
So I'm starting finals week next week, and then I have one more semester after this. So I will graduate in May 2020.
Nice, man. Nice.
Mm-hmm.
That's awesome. I mean, I wish I knew this when I was in school.
Yeah.
That's awesome.
Nice.
So what is your days like now? I mean, since you're doing school and you're trying to trade, give people an idea of what those days are like. Your morning,
Mm-hmm.
Are you at your computer all day? Did you schedule your classes around it? Like, just because there's probably
Right.
other people who may be in school now and might want to start it too, and like, man, I don't know if I have time.
Right. Yeah. So when I first found trading and really committed to learning it and doing it, I immediately tried to get all my classes to fit outside market hours. So I'm fortunate enough to live on the West Coast where I do have to wake up earlier, which sucks. But the market closes at 1:00. So it's very easy for me to pick classes that start at 2:00 or later. And so that's what I do. Like every semester, if I can pick a class that's after 1 or 2 o'clock, I will do it. To the point where I've been clipping classes that might start at 7 and only end at 9, or end at 9, like they're one day a week, kind of just to get it out of the way.
Yeah.
And so, right, I wake up 5:30. I've already had the watch list made the night before. And so I have that hour to like go over my watch list again and then watch what stocks are gapping or what pre-market is doing. Then from usually 6:30 to maybe 8:30, I'm those prime first 2 hours is when, if I see something happen, it's going to happen.
Mm-hmm.
And then midday, I might take a nap if I, waking up at 5:30 for me. And I'm a night owl, so I can't even fall asleep till like 10 or after. So
shit.
I'll usually like take a nap, 1 or 2 hour nap, like midday, just to get away from any try to overtrade or anything. And then I will like scan to the market close. Usually I don't take trades into the close, just because the market hasn't offered any great. I mean, there's some late day fades, but in terms of, I used to trade a lot into the close when longing was really like good for OTCs, because you could long into the close, and then the next morning there'd be a morning spike kind of thing, and I'd take profits in the morning. But now I'm just scanning and looking for potential plays for the next morning. And then 1 o'clock comes, the market closes, I head to school, take my classes, go to the gym, come back home, do homework, eat dinner, make my watch list, and then repeat it.
Yeah. Nice. So really so you're trading pretty much, you place trade, because for myself, I'm done by like 9:30, or I'm sorry, 9:30 Eastern time, so 8:30 my time at 9:30. So are you normally entering trades between a certain time? Have you found yourself like, I'm always placing trades between a certain time window, or you pretty free range, or like you place a trade midday? Like, I'm just curious in your thoughts on midday.
Yeah.
Lull.
I this is something I've always said I should track, but don't track enough of, which is like where my biggest profits come from. And just from knowing how I trade, it definitely is in the morning. Most trades are placed in the morning within the first 15 to 30 minutes. Because like for me, with being a short seller, it's like, if the backside's in, it's usually in within the first 30 minutes, where it's most emotional, and like the back and like trends will change. There won't be a morning spike, and there's going to be a panic. It's like those things happen quickly. So most of my trades will be I will enter at least in the first 30 minutes and usually be out by the first hour or two.
Mm-hmm.
But that doesn't mean I won't short something midday if it offers, an opportunity, or something late day if it does offer an opportunity. I just know the way the patterns that I trade work, most will show up on average in that first hour to 2 hours kind of thing.
Nice. And pre-market, what's your thoughts on pre-market?
If you're longing a reverse split pre-market, those things can make you a lot of money, but I don't do that.
Those kind of disappeared lately.
Yeah, there was a lot.
They were hot for a while.
Earlier.
They were hot.
Yeah, they'll
Real
probably
hot.
come back, but there was never a strategy I traded because I suck at longing those. But and also I don't wake up early enough for them. But in terms of, so I guess entering shorts pre-market, I if it's like an overextended gap down, I could definitely consider having a small starter pre-market because sometimes they'll never even spike and they go right down. So to have something on the trade and make at least a little bit of money might be worth it. But more times than not, I've learned, especially with listed, being patient pays way better than being eager and trying to get in and feel like you're going to miss something. There's so many times where I've, wanted to short something like right away because I thought I was going to miss it. And all of a sudden I now have a bad average and the stock actually spiked to an area where I could have gotten in. That would have been a great entry. And I couldn't because I was already full size. So I tried my best to wait for the open and look for let like 5-10 minutes play out. And then from there, I can like see the trend forming and like, okay, here's where I want to enter kind of thing.
Nice, nice. So how many strategies do you focus on now? And then we'll wrap this up, my man.
So let's see. Still do dip buys if they appear, but unfortunately I haven't dip bought a lot of stocks because now I'm such a dominant short seller that if there is something dipping, I'm already short. So I usually don't cover on the first dip like that. So I will still dip buy if I'm not short, but lately I've been short on a lot of these. So I guess technically still will dip buy. I will short overextended, runners on like a first red day or overextended gap down. I kind of clump all those into one. That's the main shorting the backside kind of move. So that's two. If longs do come back in like OTC markets, I love doing what, like Jack and like Dom talk about the OT swizzle. I will do that if it comes back around. And then in terms of that, I do short promotions, but I kind of treat those the same way as I do other extended runners. I just kind of have a longer term like swing perspective versus a 1 day short kind of thing. And besides that, those four, those are the biggest money makers. Those are by far the majority of my trades. There's a couple other setups that I might like test out, like parabolic short. I test that with really small size because that can give you pretty risky. Other than that, maybe midday bounces. Like I said, like so say and this we'll talk about midday where I enter midday. If a short, I make money on a short.
Like if it's an overextended gap down kind of play.
Yeah, if I make money in the first hour or two, but then it bounces back to like red green for like a midday bounce, I might try to short that for another profit. Besides those four and then like the two extras to make six, that's pretty much it.
Nice. And you mentioned something that it sparked a question that I want to ask for in this, and I think that was oh, it's gonna kill me now. It's gonna kill me because now I'm gonna remember, and then it's just gonna be like mother.
Yeah.
Well, I'll tell you what. If I remember, I'll just ask. I'll ask you later, but. Other than that, my man, hey, look, I really appreciate you being on the show today. We've been, and other than that, especially spend some time with me after the market close.
Yeah, absolutely.
Let's just stay in contact and hopefully bring you back again next time, my man.
Yeah, no problem. Thanks for having me. Appreciate it.